All right, good day, traders. Happy Wednesday to you. Welcome back to the live trading room, our New York edition, of course. Hope all is well today. Hope you guys can see the screen. Hope you guys can hear the voice. Let me just change the thing so you guys can see each other's names. Forgot to do that this morning. There you go. Names should be clear. And let's get ready to kick off another day. Another slow day in the market. Going to be a slowish week, holiday week, but we do have some news coming out a little bit later today. Actually, interesting kind of week. We've got Bank of Canada rate hike coming out later today at 10 o'clock. So we'll be done the live room by then. We'll be in a coffee break if I didn't just jinx it again. Fingers crossed at the time. But Bank of Canada rate statement coming out. Funny, I think the last coffee break we did was during the last Bank of Canada rate statement because we were getting ready to go to the show and I was managing an order while Jason was talking. And the rest of the week is a little bit interesting as well, right? We've got holidays across the pond for the next 2 days, right? Thursday and Friday, if I'm not mistaken. We also have our jobs reports coming out on Friday. Believe it or not, it's June already. This is somehow the first week of another month. So we've got Jobs Friday, all the non-farm goodness and jobs reports coming out as well, which can make things pretty interesting because we spoke about this in the weekend video. Low liquidity combined with volatile potential moves caused by like news events can they can cause things to move a little bit more violently than they normally would. Again, not saying that the non-farm has been a shell of itself for many years now, but it'll be interesting to see how that plays out with less participants in the market. So anyway, let's hop into things today. I don't have a single idea that I want to share with you guys. I have a few things, but nothing is too great. So I want to leave it open to you guys watching the live stream since you guys never get to participate. If you have a pair or anything that you would like me to take a look at that you want me to use as today's trade of the day, shoot it in within the next few seconds. I understand there's a little bit of a delay on YouTube and TradingView, so I'll give you guys a little bit of time, but shoot it in. We'll break it down, and then we'll kind of live rumors. We'll just go around the market and see what's there. Again, there's not all too much. Did you guys have a lot on your radar this morning? You can see the failed Gartley this morning on Euro Yen, or last night, I should say. That was hurtful. It teased in our direction for a little bit. Funny enough, here's the interesting thing. Or said just the FTB on GDP. Here's the interesting thing enough here, right? So we know what the Gartley. And this kind of stems off a conversation we had the other day. With the Gartley, we're looking for targets out of 3D2, right? 3D2 Fibonacci retracement, which is right down here, right? Where did price action come to before it rebounded and went further up? Yeah, we came right to the top of our ascending triangle, right? Right to the top of our ascending triangle and then bounce back up. So it actually made the structure-based move that we would project. Just wasn't the move that we needed for targets for the bearish pattern opportunity. Now, back in the day, this used to destroy me, right? When I was a trader that wasn't really rules-based, I was kind of jumping around between one thing or another all the time. Because guess what I would do? I would assign too much value to this because this makes sense, right? If we were trading this as a normal ascending triangle breakout, we would look for the retest and the continuation. But I would look at this failed pattern. I would give it lots of power because losing trades always stay with you longer than winning trades. And then the next time a trading opportunity came, guess what I would do? Would I put targets down here or would I put targets up here? I put them up there, right? And I would basically cut my potential reward in half here, right? Maybe I'd get the win and then price action would go down, right? And I'd be happy about getting the win, but I would get the win, but only collect half the profit. So what's the problem with getting the win, but not collecting the profit that you're supposed to get on the win? Bigger picture, thinking numbers, right? The the whole thing about trading is trading off of numbers. Yeah. Well, now my average risk reward is down, yet I'm keeping about the same win percentage. My wins are no longer making up for my losses, which means I may be even winning more, but I'm not actually making more. And there was a period in my trading where, typically I'm about a 55% trader. 60 is about my ceiling. Obviously, I have periods where I have a higher win percentage than that. But overall, when all the dust settles, I'm about 55 to 60% on average for the last probably 12 years or so. I used to be hitting at 70%, guys. 70%. And I'm looking at myself, and this is when I thought win percentage was the biggest thing. So I'm like, yeah, 70% trader, baby. I'm making money. And then I'd look at my account statement every month, and I wouldn't be making money because I was hitting 70%, but I was taking wins too early. Every loss was making up for like 2 wins. So I was 70% either losing money or break even. And I did not understand it for the life of me. I'm like, how can I be a 70% trader and not be profitable, right? I'm winning more than I'm losing, right? Do I have to be 80%? And then eventually, you dig into the numbers, you actually understand kind of what really matters in trading, and then you see the problem. So it happens. That's a long story to say. It happens. It stinks. We're going to lose. I told you we've been on a heater of patterns lately, so these losers are going to come. I would expect more. We got pound yen setting up one as well. All right, so no input from YouTube or TradingView. Looks like they don't have anything on their radar either. Live rumors, anything you guys want to take a look at for, starting off? If not, I'll choose something. I got some things I can look at, but let me know if there is. Maybe have a short session today. Or she says, me choose. George says, I got nothing. All right, let's go to dollar. Either dollar yen or Aussie dollar. Aussie dollar was on the radar yesterday. Let's see what dollar yen's up to if we made it to structure yet. All right, let's go to dollar yen here. We'll start dollar yen on the 4-hour. Again, we're the best of not a lot of opportunities, but IPDE, identify, predict, decide, execute. Price action has been on a bullish tear here on the dollar yen, right? Again, with our IPDE, we want to identify what has price action done, what is price action doing, where is price action at. So price action has been moving bullishly since 126.5s. We have moved bullish up into what? Up into what? A previous level of structure, right? We know that structure acts like a magnet. Price is pulled towards it. Price is pushed away from it. So we're at a previous level of structure where we're starting to now ask ourselves the question, okay, how is price going to react at this level of structure? There are 2 things it can do. It can either hold structure or it can violate structure. If we violate structure, meaning break and close above, our prediction is now that we're likely to continue to the next level of structure, right? It hops from one level to the other level, like Mario, jump from one block to the other block. Sorry, we got a Mario calendar. We just switched it over to June this morning. So we are at previous level of structure. If we violate, we expect a continuation higher. If we hold, we would expect some type of relief. If we violate to the upside, where would you guys expect that we or predict that we're likely to continue to next? Practice our skill of prediction. Again, we can go 2 ways. We can go up or we can go down. So we want to ask our questions. If we go up, where we like to go up to. Again, there's no wrong or right answer. I guess there could be a wrong or right answer, but don't be afraid to share your opinion. 131s says Duncan. George says 130.73s. So the structure level right below. Bobby says 130.50. So the inside structure level right below there. All right. If we go down, where would we? There we go. Where would we likely to go to next? Where would we likely go to next? There we go. Too many words. Feel free to participate, YouTube. 129 even, says Orsi. Right in here, right around that area. Inside levels of structure. 128.5, says Ollie. Lower level of that structure. 128.9, says George. Perfect, perfect, perfect. So we've got our prediction set up, right? This is that whole process, right? We're at a decision point. Right now, we know that if price action, right, the price action is going to tell us what we should do. That's the thing, right? We don't have to make a decision where it's like, hey, should I buy or I sell right here, right? Price will tell us. If we violate, then our prediction is that prices continue to go up. If we continue to go up, we're likely to go up to one of the levels you guys wrote down. If price holds, then we're likely to get a little bit of relief. Where are we likely to get a little bit of relief to? The levels that you guys anticipated, right? So you see how we did the majority of the work already, guys? Does that make sense? And this is that pre-market analysis you should be doing if you're using a pre-market checklist. You write down these things, and all you do for the rest of the week is just kind of evaluate and see if anything has changed. So now the question is, as a personal trader, what do you need to happen at this level in order to get short, right? Do you need some indicator confirmation? Do you need the RSI overbought? Do you need to bring your volume profile in and see if it's at a high volume level? Do you need Fibonacci confluence? Do you need a pin bar to probe the highs? Ooh, sexy. Do you need a double top? Do you need a 2618, right? And this should be in your trading plan, right? Because this is your entry. This is you deciding how you want to attack that trade. After that, now you just need to obviously wait until it happens. But you also want to, if you can do, and this will depend on your entry, if you can do a preliminary kind of risk reward to see if the risk reward would actually make sense for you, you can do that as well, right? This is going to be a closer target. So depending on where that, again, we can kind of get an idea for stops. It's really early, but we can get a general idea perhaps. Let's say stops are going to be like right at 130s. I'll bring this line down. So if you know stops are 130s, and again, you have to reevaluate this as price moves on, but get an idea. If you know you require a 1-to-1 or take whatever your required risk reward is, now you know that, hey, anything below, any type of entry reason below this level is not going to work. Anything below that level is not going to work because of my risk reward. Anything above that level will work. Again, that's based on this time frame. Of course, you can always drop down to a lower time frame as well, right? If you are allowed to, and look for a potential entry reason down there as well. But decent trading opportunity on dollar yen right now unless we violate that level. I'd be gearing up for shorts. I never want to anticipate the longs until we actually start breaking it or show signs of breaking it. But decent opportunity to put on the radar there. Ali says, Coach, could you say your prediction on where price would go? Yeah, if we go up, sorry about that, didn't even do that. If we go up right here, 130.70s, I get so caught up in asking you guys and drawing them on, I forget to do that sometimes. If we go down, same level you guys predicted, right around here, 128, 129 evens. So it's really this level of structure, this inside level of structure, adjusting a little bit higher because I don't want to be at 128.96 when I could be at 129s. Yep. So this inside level of structure here. Yep. And this level of structure right there. Whoop. Now, although this would be an interesting one to take notes on, right? We talked about talking about maximum favorable, maximum adverse excursion all week. Let's say we do violate this level, and let's say that I'm in a trade, I buy it, my targets are up here. Oh, sorry, my targets are up here. Price does this, and then does that, right? So a stinker, stupid trade that stops me out, right? This is where that continued evaluation always comes in handy because we've been playing around, excuse me, with our volume profile, right? Do you see anything that may stand out? See anything that may be worth putting into your notes? Again, imagine I took a long trade. I had my targets up at the white line. Price action came a little bit before my targets, looked me in the eye, winked at me, and turned around. Story of my life. It's like when you're in the bar and the very attractive young lady comes up and she's walking your way and she's looking at you and she's got like the flirty face on. You're like, here we go. Here we go. You start moving the hair around, sniffing the pits to make sure everything's good. And then she looks like she's coming for you and heart starts beating. And then you realize she's not looking at you. She's looking at the extremely hot gentleman right behind you. And she walks right past you to him. Mm-hmm. Yep. That happened to me a lot, guys. And I always felt sorry for the person sitting in front of me. What, you thought I was going to say that I was the one she walked past? No. Forex trader extraordinaire? No. Not when I'm wearing that shirt that said Forex money, baby. Forex money, no stops. Calvin on Trading View is laughing. He's looking right through you. The real Pip Daddy. Hey, what's your name, Pip Daddy? But here's the thing. Here's the thing. It's like what Cinderella. When 5 o'clock hits. If for some reason we're in a bar on Sunday, if 5 o'clock hits, I have to leave. I have to be home by 5 to check the open. So we're all talking, and all here's ding, ding, ding. What time is it? Oh, it's 5 o'clock. I've got to go. But I didn't get your name. Find me on social media. or log into YouTube every Tuesday, Wednesday, and Thursday at 7:30 New York time for the live stream. Anyway, so what we can evaluate is here. Again, we see a massive difference in a higher level of volume right before a smaller level of volume. So this is something we would take note. There we go. No one participates until I tell the bar story. Great, guys. We see the higher level of volume down here. We see the lower level of volume up there, right? This is, if you guys are new, this is something that I've been tracking all year. I've committed to do a year-long study on volume, this volume profile indicator specifically. I've done about a 2-year study on volume in general, which has been very interesting. Not as rewarding as I thought it would be, although I didn't have that high of expectations to begin with. But this is something that I think actually will be utilized in my trading. So we're doing a year-long run. I know it sounds like a long time. Akil, why would you test something for a year? Well, I have the luxury of doing so because I don't need it. I'm trading quite fine without it. So I really have the luxury of giving it time. I don't need to add it. I get to really see if it will be helpful first. It's like a year-long back test, essentially. But you can see that if we take notes of this and we see a pattern of you just missing targets and this same type of situation happening, this should stand out for you, right? That should stand out for you. You should be wide-eyed. I don't know what that is, but you should be wide-eyed looking at that and saying, okay, maybe I need to start making adjustments when we see these two type of levels. So that's something that goes into the continued observation of your trading when you're doing your post-market review, your post-market analysis, and taking notes, because those are changes that can be made that can be quite beneficial, especially if it is a difference between you, difference between you missing a trade and making profit on a trade. Real quick, Duncan says that's when you turn around in a very loud voice, offer up the address to the closest gay club to that hot guy. Well done. Well done. You got to hate at that point. You just got to hate. Oh, if it's not going to be me, it's not going to be anyone. So anyway, weird trade of the day here. Again, it's a really slow day, but for you guys on TradingView or YouTube, any questions about any of this before we kick you guys off? Hopefully we have a little bit more action for you tomorrow. But summer days be like this, I told you guys. And then live rumors, we'll scroll through some more stuff. Again, maybe a short day, but I'll do kind of a speed session. You guys can stop me if you see anything. But give me a second, got to clear the throat, see if there's any questions on social media, and then we'll continue on our way.